It's the Friday edition of Business Morning on Channels Television. Good morning and you're welcome to the show. I'm Ini John Mekwa. Well, let's start with updates from the global oil space. Oil prices climbed today, heading for gains of more than 2% for the week on increasing signs of tight supply over the next few months as rocketing gas and coal prices took a switch to oil products. U.S. West Texas Intermediate crude futures rose 30 cents to $81.61 a barrel, adding to an 87-cent jump yesterday. The contract was heading for a 3% gain on the week. Brent crude futures rose 28 cents to $84.28 a barrel after picking up 82 cents in the previous session, leaving the contract set for a 2.3% rise for the week. Analysts point to a sharp drop in OECD oil stockpiles to their lowest level since 2015. Demand has picked up with the recovery from the COVID-19 pandemic, with a further boost coming from industry turning away from expensive gas and coal to fuel oil and diesel for power. The International Monetary Fund is predicting that the pandemic has permanently lowered the path of real GDP in sub-Saharan Africa, suggesting a loss of real per capita output of close to 5.6%. In its latest issue of the Regional Economic Outlook Report, which was released yesterday, the IMF estimates that SSA economy will grow by 3.7% this year and 3.8% next year, but notes that the region is on a different recovery path from much of the world. Briefing the media on major drivers of growth in SSA, the Director of Africa Department at the IMF, Abebe Selassie, stressed the region's recovery remains highly vulnerable to changes in the global outlook.
Against the backdrop of a context of weaker than expected growth, policymakers need to navigate amongst three formidable pressures: pressing spending needs to address the many social and human capital and infrastructure needs they face, limited borrowing capacity, given the already high public debt levels in most cases, and the time-consuming and politically difficult nature of mobilizing tax revenues. How deftly countries navigate this trilemma, as we've been calling it, will have a huge bearing on macroeconomic well-being of countries, as well as economic growth prospects.
Two other issues now. The retail sector includes any business or individual involved with selling products directly to consumers has had a major disruption, talking about COVID-19. The retail sector includes shops, department stores, supermarkets, market stalls, door-to-door sales people, and internet retailers. As just 5% penetration in Nigeria, over 80% of shopping in the country is carried out in traditional shops. Now, should we be concerned about this? Is Nigeria losing anything with this? We have Dr. Uchenna, Director, Africa Retail Academy at the Lagos Business School, to talk to this. Good to speak with you, Dr. Uzo. Good morning.
Morning, Ini. It's a pleasure to meet you. Thank you.
Good to speak with you too. So, retail penetration in Nigeria currently is estimated at 5%, lower than, other African countries. Should we be worried about this? Is this a problem for us?
Well, first I would say retail penetration in terms of digital retail penetration is what is at 5%. What we see is that retail in Nigeria and largely in Africa is highly unstructured, and therefore 90% of retailing activity on the continent happens through unstructured markets. Should we be concerned? Yes, we should be concerned because on the one hand, if we can put some more structure, if we can use technology more efficiently, if we can borrow from some of the trends happening in more advanced economies, it will help to accelerate the growth of retail and the capacity for retail to contribute to our GDP. However, there are exciting opportunities that even working traditionally allow us to do. There is a way that being on the ground and being very close to the consumer actually makes it possible to sell more, over time. But I must say that retail is also happening in many other sectors, not just our traditional shopping sectors, but also in restaurants, in pharmaceutical chains, hotels, even banks. And so we need a broader understanding of what it takes to win in retail. And all these different sectors can learn from each other, in my view.
Okay, but let's even review it a bit. I know with COVID, even without COVID, the disruption is that technology is infused into everything, especially in the retail, Then with COVID, we see a lot of adoption or adaptation. How are we doing in Nigeria when we talk about this adapting to digital and internet-driven retail sector?
So in Nigeria, I would say there's been an uptick from the beginning of the pandemic in terms of the percentage adoption rate, within the e-commerce space. This has happened a lot with a lot of retail businesses, but also lots of conventional businesses now have a digital presence. However, the issue that a number of businesses are facing now is that it's not just enough to go online. It's not just enough to sell online. You have to also know how to connect your digital selling with your physical selling. And that's where many organizations are having challenges because both channels have to speak to each other. And so technology can help in that way, but having a better trained sales team that knows how to connect the dots is something that is important. And therefore, the outlook, I would say, is that digitization and the use of e-commerce platforms is only going to grow in Nigeria. However, those who will win are those who know how to carefully combine physical with digital in a seamless way, such that customers can order, digitally and collect physically, or vice versa, in my view.
So when we look at a case in point with Kenya, they've done a lot when it comes to, the e-payment. Even in the rural areas, a lot, even in open markets, little stalls, they deal with e-payment. Do you see that happening in Nigeria anytime soon? And as long as we are not there, what are we missing out?
So I see that there's going to be growth. I mean, if we cite, for example, the fact that 5G, the whole 5G network technology has been introduced. If we look at what is happening in Nigeria's fintech space and the amount of foreign direct investment that is coming into that, the indicators are clear that we are moving more in the direction of digital in the way that we sell and in the way that we relate to the customer. So I think that the future is bright. If we look at Kenya, absolutely, you are right. There's been an acceleration towards digitization, but the traditional channels are still very vibrant in Kenya. In fact, they have had to step back a little bit from digital to embrace what the traditional channels are doing. I don't know if you are aware that a couple of supermarket chains, namely especially Nakumatt, closed down in Kenya for various reasons when they were looking towards digitization and e-commerce penetration and so on and so forth. So what my thoughts really in this area are that there's going to be an increase in digitization, but at the same time, those who will win are those who are able to combine this carefully with traditional methods, because in the end, digital can't solve everything, but digital can accelerate the rate of growth and scale that businesses have.
So let's say measuring now, because at the moment we see over 80% of shopping is still carried out in traditional shops as opposed to supermarket stalls and stuff like that. So let's say in the nearest future, where do you see this tilting to?
Okay, I'm not a prophet, but I'm going to hazard a guess. So I see perhaps in the next 5 to 10 years, we're we're still going to see a mix of traditional and digital, but probably we will get to a state where it's about 50-50, perhaps in the next 5 to 10 years, depending on how customer lifestyles evolve. Remember also that retail and the digitization of retail is also largely driven by consumer lifestyle and customer needs. What they want, where they want it, how they want it, when they want it. And so as the customers and consumers become more demanding of the need to have technology-enabled solutions to help them get products and services they need, then the faster, the adoption of e-commerce as a credible way of selling. Of course, there are also trust issues that need to be dealt with. Trust and margin issues. On the side of trust, many people don't believe that e-commerce works, or they feel that fake products or not so high quality products might be sold to them. So these issues need to be addressed. The trust deficit, which is not just in Nigeria, it's all over Africa and even in some other parts of the world. And then the traditional retailers that we have, many don't actually believe in e-commerce yet. So there needs to be adequate work done to help them understand the power of e-commerce, what it can do for them. It's about educating them to see the opportunities, and also working out, the margins, working out the distribution and logistic problems around retail. These are issues that actually need to be addressed if we want to accelerate e-commerce in Nigeria and in Africa.
Well, that's a lot to focus on. But there's also the question of, are there enough incentives to push this switch, from the traditional to the e-commerce?
Well, in my view, I think there are quite a number of incentives. They may not be enough, to be honest, but there are incentives. The fact that we're having a growing number of young, trendy customers who and consumers who are attached to global brands, who can buy from Amazon, they can buy online, they can buy foreign brands, and at the tip of their fingers. And so if we in Nigeria or in Africa are not as agile and not up to date with what is happening in the e-commerce space, definitely we're going to lose our share. Definitely we're going to have a case where customers in these parts of the world, in Africa, are going to continuously prefer global brands to local indigenous brands, which, by the way, is what the latest rankings around top brands in Africa say. People tend now to prefer Nike, Microsoft, Apple, top big brands as their major brands before even looking at African brands. And this is largely driven by e-commerce. Therefore, in my thoughts, it's really about working out these problems carefully through partnerships, through integrations, and it's looking at other sectors and looking at what they are doing to embrace digital, the banking sector, the insurance sector, and trying to see how these different things happening can be deployed into a traditional retail setting for growth.
And you also said something earlier about trust, because I'm sure you've heard of what I ordered for versus what I got. Sometimes
Yes.
these things happen. How do you think, or whose responsibility is it to take care of things like this? Because these are some of the discouraging factors to people embracing e-commerce.
Exactly, absolutely. So in terms of whose responsibility it is, it's the responsibility of the e-commerce company and also the suppliers, those who supply those products and services, to keep to the agreements. There are service level agreements, there are standards of quality, but perhaps the scrutiny and the controls and the monitoring of how and when things get to the customer need to be improved upon. It also means that perhaps feedback is not being used adequately. Customers always give feedback about what they are not happy about. And so e-commerce platforms that are responsive to feedback will be able to, address these issues. The return policies also can help if they are strengthened, if people see what they don't like and they're able to return them at no cost to them. I think these are things that will reinforce and give that trust back.
Okay, but when you talk about that, don't we have like a regulatory agency that's, I mean, what if it happens to me and the salesperson refuses to take responsibility or to do a refund, then who can I run to as a consumer?
So there are regulatory agencies. NAFDAC is there. There's the Consumer Protection Agency, and depending on what is being bought or sold, there are different regulatory agencies that one could escalate matters to. And this is a way that we can actually hold suppliers and e-commerce platforms accountable for what they sell. So I think those regulatory agencies are available, but I think it's also about educating the consumers about the options they have for sending feedback, for complaining if they are not happy with things, and for celebrating positive things that they have experienced through these e-commerce platforms. That I think is what will help. And as more people adopt, these e-commerce platforms and share their experiences online about shopping through those platforms, I think that will also help to change the mindset and reduce the trust deficit that we see. The other thing too, I think, is that not everything can be sold online. I think there's always the temptation amongst people in business to think everything can go online. There are a lot of B2B businesses that don't need a strong online presence to sell what they sell. There are a lot of large ticket transaction items, like seriously large real estate property, for example. People want to see and touch and feel what they want to buy before they do so. So we need to be careful also about putting everything online, trying to carefully think about what it is that people want to see online, how, when, and then sell it to them at the adequate price. We can actually use the online presence to introduce what they will see and touch physically. We can also use, some people are using now augmented reality and virtual reality to help people touch in a digital platform what they are going to buy. And I think these are new trends and new ways we can adopt here in Nigeria and in Africa that can reduce the trust deficit that we see.
So as a retail academy, of which you are a director, what are you doing to help boost e-commerce in Nigeria?
So the Retail Academy's purpose really is to achieve and enable the transformation of retail in Africa by giving people who are into retail career development and enablement opportunities, lifelong learning, capacity building, networking opportunities, research. There are actually certificate programs now for people at different levels of retail. So we have the certificate program for retail managers, certificate program for retail practitioners, and certificate programs for retail executives. All these are targeted at addressing capacity issues in each of those cadres of retail. Because what we see at the end of the day is that retail, being as huge as it is still largely neglected from the point of view of formal education. There are very few institutions in Africa that are paying close attention to retail, whether it's e-commerce or the traditional methods. And people have to go abroad to learn what it takes to do retail properly. Lagos Business School, through its academy, is addressing that gap, is giving people in retail in this part of the world hope, is giving them the opportunity to scale, is giving them the opportunity to see retail as a career. That is also something people don't see very much here because there isn't that formal education and support through their time in the career space. And this is what Lagos Business School is really offering. The other thing too that the Academy will achieve is advocacy, is supporting the government in having a retail policy, and then also linking people involved in retail and e-commerce here in Nigeria with other parts of Africa, so that this intra-regional trade, which the AFTA agreement is looking at achieving, will be more accelerated through the digital space and through the traditional space.
All right. Thank you so much, Dr. Uchenna Uzo, Director, Africa Retail Academy at the Lagos Business School. Thank you so much for sharing your thoughts with us this morning.
Thank you so much, Ini.
So we'll take a break now. After the break, how can workforce productivity be improved? That's our next conversation. Do join us again. It's Business Morning on Channels Television.